Welcome to the Winner's Playbook with Steve and Josh. Disclaimer: the information contained in this podcast is general in nature and does not take into account your personal circumstances. Please head to the show notes if you wish to book a free 15-minute call to discuss your personal situation.
All right. Welcome back to the Winner's Playbook. My name is Steve Sloan. I'm here with Josh Lee. It's been a very big week, Josh. I'm currently sitting in Adelaide. You're in sunny Melbourne. Should I say sunny, cold Melbourne?
Not so sunny.
How's the week? But before we dig into a hot topic for this week, how's it been this week?
Yeah, mate. Frantic week. Plenty on the go. Business as usual. Probably more on even personal life as well. Things are changing, as maybe not all the listeners would know, but can probably formally announce that I'm going to be a father later at the end of the year, which is big news. And I know you're very happy about that, Steve, to see me have kids and have a bit of fun there and suffer. Maybe, I don't know.
Responsibility, mate.
Responsibility, yeah. There's nothing wrong with that. But no, looking forward to it. And yeah, we got our Melbourne conference for the Australian team next week as well. Getting the whole Australian team together for a bit of a reflection of all of what's been happening and sort of set the scene for what the next couple of years are looking like. And just helping clients figure out what to do with their life in between all of that. What about you, Steve?
Yeah, good. Look, congratulations, mate. I've said it before. I'll say it again. Congratulations. It's great to see. And I believe it's going to be called Steve Jr. Is that right?
Well, we find out the gender on Saturday, so TBC.
Look, big week. I'm back in Adelaide. I've spent a couple of days in Melbourne this week after being in Philippines last week, and all happening. Good to be hitting the deck. Lots of activity. We're actually looking at purchasing some businesses at the minute, so it's all exciting stuff. But let's rip into it, mate. This is a topic that we see a lot of. I think the benefit of our job sometimes is that we see a lot of clients. So one side of the fence is that we have to understand advice and we have to understand technical knowledge and taxation, etc. But the other side of the spectrum is that we see and meet a hell of a lot of people in our job. So we see what works, what doesn't work, what pays off, what doesn't pay off. And part of that conversation often is credit cards. We see a lot of people with credit cards. We see a lot of people use credit cards well. We see a lot of people use credit cards poorly. There can be ups and downs, which we'll talk about today. But if we dig into it, mate, and first off, should you have a credit card or not? If I hit you with that one between the eyes, what's your thoughts?
Yeah, no, credit cards, lots to talk about with credit cards. Good and bad for sure. Yep. Where do we start? Like, should you use a credit card? I'd say if you don't have a grasp of your just lifestyle and cash flow in general, you shouldn't do it, because you're using debt essentially, and it can go really bad if you do it wrong. And credit cards have the highest rates basically of interest if you get into a position where you're only paying back the minimum on your credit card every month. You're paying, say, 19, 20% rates of interest, which is disgusting if you end up in that sort of a position. Because if you think about it, if there was an investment that could give you a guaranteed return of 19 or 20% every year, you'd be in on that. All in, let's do it. Credit card is basically the reverse effect of it, because you're getting a negative 19 to 20% return essentially on your money, which is not a pretty scenario. And do see it from time to time. Unfortunately, clients get come to us, and part of it's because they've wrapped themselves up in a bunch of debt and various credit cards, and need to get out from under it, because it just sort of compounds on them and they can never really get ahead. So I'll say credit cards are good if you know how to use them, and as a part of that is you need to have a grasp of your money and your cash flow and have the habits. I think you got to have the right habits in place before you throw the credit card into the mix. And I do have ways that I go about that with clients, because a lot of clients I see, I don't know about you, Steve, but a lot of people I see, use their credit card for essentially everything. Like even right now I'm renting, in the process of buying a home to live in, but renting, and I actually pay my rent on my credit card. So I don't think all credit card providers allow that, but you can virtually nearly pay everything on a credit card, depending on what it is. But I know you're a seasoned veteran with credit cards, and I know you love your points and you get around the world and do all those things. So what's
sure that word veteran sits well with me, but anyway, we'll roll with it for the audience. Yep.
What's your scoop on credit cards? What's been your experiences to date with credit cards?
So I back you 100%. Funnily enough, I'll back you this time. So, if you're good with money, you can have credit cards. If you're bad with money, don't. Simple, right? It's a very simple equation. If you've got to be able to control your cash, if you can't do that, just simply don't have a credit card because, the 5% of the population that can't manage the money well, then they shouldn't have credit cards because it can get them in a lot of trouble.
Yep.
Putting that to the side, right? So I'm going to take it that you can manage your cash well, and we're going to talk about those people. They can have some upsides, but they do make you spend more. I think that clearly there's lots of studies out there that show that when you've got credit cards, it's very easy these days to tap and go and tap, 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 tap. So the reality is, for the best of us, you still spend more, right? And I know that. I probably spend more because I've got a credit card. So you got to get your head around that one. So if you're trying to go through a very tight squeeze and you're trying to save money for a certain deposit on a house, whatever it may be, maybe you do consider getting rid of it for a while for that reason, potentially, or you do consider getting rid of it if you're trying to get debt, because it does affect your servicing levels and how much money the banks will give you. So there are reasons to get rid of credit cards at certain times of your life, and that might come in and out of your lifestyle. Putting that to the side, they can be very beneficial. I've used credit cards for my whole adult life, and I've managed it well. I've probably never really paid a cent of interest on them because I've always paid off debt. I think I'm wrong. When I was younger, I got myself into some credit card debt. I think in my early 20s, managed to sort of manage it through with those transfers of interest cards and got out of that. But after that period of my life, and I was a bit juvenile, then I don't think I've ever paid any interest. However, I travel a lot. So I'm on a plane pretty much every week, whether it's domestically or internationally. I do travel a lot. And if you are in my situation where you're traveling and you're on planes and you're on hotels, they can be unbelievably beneficial. So if I look at my own circumstances, I've probably flown circa 100 flights for free, I reckon, using credit cards. I've flown around the world probably 5 times for free using credit card points. So they can pay off significantly if you can manage them well. I fly between Adelaide and Melbourne every week, and I reckon two of those flights a month is free. So on credit card points. So freaking flight points to get transferred from credit cards. So if you know, but it is a system that I know very well, and I think you've got to understand the system and how it works and what is beneficial, what's not from a points perspective. But because points are like currency, they are effectively cash. And if you get your head around how it works and what's the best solution, and I'm happy to talk to the listeners if they want to speak to me direct about this because I know a lot about it. If you can use it to your advantage and know when to redeem points and not, they can be unbelievably beneficial. So,
what about at a high level? Like, because I've looked at that before, and I definitely don't truly grasp the where you get your best bang for buck for points. But is it typically on flights or like hotels, or can it like vary from just what's happening at any given time?
Yeah, it can vary because you've got to really understand what's the dollar cost of a point.
Yeah, sure.
And then look at the price in dollars. Sometimes it pays to pay in cash because sometimes the flights are very cheap. If that's the case, it's better just paying cash. If the flights get up a bit and the dollar terms are a bit more expensive, you look at how much the redemption is. And if you know how much a point costs you in dollars, you can quickly do the calculations in your head about is that a good deal or not. They bank on the fact that you're going to use points at the worst times. So they inflate the points that you need to use sometimes to get a hotel or a flight, thinking that you don't understand the value of those points, and that's how they get you. If you understand those values of cash versus points and pretty well, you can play the system absolutely to your advantage. So I know how much the dollar value is of a point, and I can convert that immediately to cash value, and I know straight away if I'm getting a good deal or not, effectively.
Yeah, no, it's interesting. I suppose if we're then sort of staying on the positives of the credit cards for the time being, so obviously, yeah, you get those points from you doing your spending through it, but then also like talking of travel, which is obviously you do a lot of travel. I do a bit of travel from time to time, and happy to share a recent personal experience of a mistake I made because I didn't use a credit card, and that was an upcoming trip that we were going to be doing overseas, and as a novice traveler, didn't pay for our flights using a credit card and instead paid it from a bank account. And then the issue there is now in turn when you generally with your credit card, when you pay something for travel that you're going to be doing, it activates like your travel insurance policy, which is like built in generally into your credit card that's provided. And I didn't use my credit card to pay for all the flights, and now we've had to actually cancel for different reasons. And now there's actually an issue of us now being able to get back any money or make claim on anything because we didn't take out any travel insurance, because normally I have in the past paid and used my credit card, and travel insurance is all built into the credit card. And that is one of the benefits that you do get. And that's generally why when people travel overseas, they generally use a credit card for covering all of those things, get your travel insurance. And also in case like scams and things like that, I think it can be a little bit easier in terms of getting getting money back and so on. Whereas if you're just using your bank account, it's going to be a little bit different. So I can definitely talk from personal experience of where they can be beneficial from that side of things. But if we flip it around to, I suppose the negative side of things, and sometimes you hear people like getting credit scores, like you're actually an accredited mortgage broker as well, Steve, like, getting, which I think it's more of an American thing. You hear people like, oh, I need to take out a credit card because I need to build up my credit history and so on and so forth. Is that even a thing in Australia?
Not really. No,
Yeah.
like it's not really. The more credit hits you get, and every time you get a credit card, they hit your credit file to suss out if you can afford a credit card. Yeah, that only I've only ever seen that work against you, really.
Yeah.
It's a bit of a fallacy, that one. Clearly the less credit you've got, the better it is for the banks. Because they clearly can't spend as much. So I think that is a bit of an American fallacy, that one. I think the key part, just keep them in check, keep the credit limits in check. I think it has to be noted, there's so much fraud these days with credit and all that sort of jazz that you don't want too much exposure, I don't think.
Yeah.
So I think managing it, it's just sensible. There's no point going out there getting a $50,000 credit card limit if you don't need it. So I think just keep it in check. But if you do that properly, pay it off every month, they can be quite beneficial, and especially if you can combine that with a point system. And I think that's the key part. I look at those credit cards a lot, and there's a lot of moving pieces with them and who's offering what. And I think it's just so important to do your research into those credit cards. Like they differ significantly between interest rates. There's actually some interest rates between 8 and 10% on credit cards,
right.
but they don't offer points. So
Sure.
So you can get credit cards like that, but they won't have a point system. My credit cards, if I defaulted and didn't pay the interest, are significant, like you said, 18, 19%. I think it's actually one of them's above that, to be honest. But I pay it off. But they have point systems. So the higher the interest rates, that if you don't pay it off, generally they will have a points redemption system.
Yeah.
The lower the interest rate, generally they don't. So the credit unions, etc., will issue credit cards, and they don't have those types of systems. But if you manage it well, it can pay off. But tell me, mate, what happened to you specifically with that? What's the outcome with that issue you've had with the
ongoing, Steve? Ongoing outcome. So because we didn't use it and we didn't activate a travel insurance policy because we didn't pay anything through the credit card. Now we're having talks with people and trying to figure out how we can get some of that money back. So all I can say is lesson learned for me, and I'll never do that again in booking travel and not use my credit card exactly for that reason. But I don't want to just be sitting on here talking about all the positives, Steve. I want to talk about some of those negatives further as well. So I know you're talking about all those points, of course. Now let me come in and talk about some of those negatives a bit more, because the big one you said earlier, like the borrowing capacity is a big one. And typically when people go for home loans, depending on how much you're earning, banks might tell you to get rid of your credit card entirely or reduce down your limit. If you do have a large limit on a credit card, they'll tell you to pull that credit limit down in order to be able to get the loan. That's not a major drawback, but how I generally use them with clients, because most clients have a credit card. I use a credit card, but I think the way I would tell people to use them is separate your daily spending and don't use that for a credit card. Because like you said earlier, there's a ton of studies out there that show that you will just spend more money if you use a credit card. Because it's not like you've got cash in your wallet and you have to take cash out of your wallet to buy that thing. you're tapping, you're not even seeing the money essentially leave your account. And it's so much easier to overspend. There's a ton of studies out there on it. And that's when I say to clients, like, look, if you're going to do it that way, and you said it earlier, like you overspend by using a credit card. And that's naturally just what happens. Yes, you're going to get some points, but then you're also going to spend more money than if you didn't use the credit card in the first place. So where I kind of see the happy medium of doing it and how I kind of try to do it in my own situation is things you can't overspend on, like your bills. Like you have to pay your bills, yeah. You got to pay those. You can't not pay your bills. Like my rent, I have to pay my rent. Whatever, that's fine. So I try to use those for the credit card, but then separate out all of that daily expenditure, all of the tap and go, and do that then from a bank account. And that's where I would generally do it with my clients. Like I try to keep credit card out of the mix unless I'm confident in their ability to manage this system that we're going to put in place for them. And then I generally have them putting all of their bills, all of that non-discretionary expenditure through to the credit card, get the points. We can't overspend on that, but then have a separate account for all of the everyday expenditure and then have a limit on that every single week. Because it's not like a credit card where you can essentially just keep going. Every week, say for example, like in my own situation, it's circa $650 a week is what we need to stick to on a discretionary basis for our like groceries, fuel. If we want to go out for dinner, I'm not a party animal like Steve, so I don't hit the clubs or anything. So that's fine for me. Having a limit there, but every time we spend, there's money coming from that account. So we're like, all right, we're seeing it going backwards and we know how much money we have left over to make the week last. But separating that from the credit card is a big one because it's all that, you go to the shops, you want to buy some clothes, all right, just tap and go, off you go. But if you've got a limit on what you're spending week to week on those discretionary items, there can still be place in there, I think, for a credit card. And that's generally how I try to approach it with clients that typically pay all their bills and everything on there through their credit card. So I think it's just, you got to have that balanced approach and know what you're getting into. And like you said, they can work really well if you understand how that points system and scheme essentially works.
Yeah, I think what you're saying there, it's a system, right? It's a system. You've got to have a system, whatever system works for you. If you can't work it out yourself, then go see an advisor. But with money, it's a system, whether it's your bank accounts, your credit cards, how that flow happens. It's an ongoing management piece that you try to deck out as best you can, but just get that flow of money right. And that clearly includes credit cards. Yeah. But yeah, everyone's got their own system. And once you find the system that works for you, stick to it. Just use it to your advantage and get better at it. And that's what I've done. I've got a system, and I know every week and every day what needs to happen with that money flow. And credit cards are part of that conversation. And if you can get good at it, you absolutely use it to your advantage and get that free flight to the Bahamas and sit on the beach with a cocktail in your hand, mate, and away you go.
Well, it's funny you say that. I was just thinking, I've had some friends over the journey that, didn't have money to go on holidays, so they got a credit card to afford the flights. Now, that's a recipe for disaster. Yeah, it's not if good. You probably don't have the money to buy something, getting a credit card so you can then go out and buy it, let's just finish on that. That's probably not a good move.
No,
and I've heard of that many, many times, in my journey of people taking out a credit card just so they could afford to then go on those holidays, and then they're going to worry about it when they get back. Yeah. That's not a great way of thinking in my.
No, it's not. If you're signing up to a credit card to get your $50,000 or $80,000 of points or whatever, it's clearly a bad setup. They're doing it for a reason. They know what they're doing. They've done it many times, and they know that probably 9 times out of 10 they might stitch you up some way, shape, or form. So definitely don't do it that way. Clearly get your money under control first. Get your savings under control first, get on the journey of investing first. Then once you're on that journey, then talk about maybe going in to get a credit card. But do it and do that last.
Very wise, Steve. Spoken like a true veteran, mate. I love it. But guys, we'll finish up there. Appreciate everyone that is listening, and if you're getting value from this, 5 stars on Spotify and Apple. And as always, if you do want to come through and chat with any of the advisors, doesn't need to be Steve or myself, jump on Link Wealth Group website, and you can take a pic of anyone there in between. And of course, follow us on all of the socials: LinkedIn, TikTok, Instagram, Facebook. We're basically everywhere if you can't get enough of us already. Steve, I'll see you on the next one, mate.
See you, mate. Bye.
Cheers.